We're half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories this Monday morning in the Asia Pacific. President Biden condemns political violence after the assassination attempt on Donald Trump. We're live in Milwaukee, where Trump has arrived for the Republican convention. Now, the dollar and Bitcoin on the up as the so-called Trump trades are gaining momentum. Stocks across the Asia Pacific, though, are mixed, while U.S. futures are fluctuating. And it's a big day for Chinese economic data. You have GDP numbers coming through, also monthly activity numbers, as you have top leaders convening for the twice-a-decade policy meeting in Beijing.
We thought China was going to be our top story here today, but certainly the events of the weekend in Pennsylvania have certainly rocked and tested these markets here right now. So we're focusing a little bit more on these so-called Trump trades, right? So we're certainly seeing, after this assassination attempt of the former president, this flock to the dollar that continues in the Asia session here today. Interestingly enough, we're watching everything from U.S. futures to VIX futures, not doing too much. So maybe you might not see that big of a market reaction when it comes to stocks here this morning, but currencies are certainly reacting. Take a look at the Mexican peso, extending those losses here the last few hours into the Asia session, and Bitcoin as well. There you go. Yes, there's a bit of that, investors seeking a hedge here against all this political turmoil, but also, Trump has been seen as more of the crypto-friendly sort of candidate in some ways as well. So there you go. Bitcoin now breaking above that 61,000 level. Keep in mind, Japanese markets are shut for a holiday here today, so you might be dealing with some liquidity issues, particularly when it comes to the FX space as well. But this is what the setup into Asia is looking like on your Monday morning. Stocks are, relatively speaking, a little bit supportive here. You are seeing some gains at the get-go in Taipei. Australia is up some 1% as well. Perhaps, there is a sense that this whole inflation data that we got out of the U.S. last week, is that going to still be the key driver when Powell speaks later on this week as well, and maybe might overshadow all this political risk that we're dealing with here this morning. But certainly we're watching those Trump trades, right? From the dollar to maybe bond futures, which are still in the red here this morning. Those steepening trades certainly is one thing we focus on as well. And we're watching, of course, what's been going on with the G10 space as well. Sterling, we're punching close to 130 now. UK inflation is going to be really front and center this week. We have an EC meeting as well, and we're at 158 levels for dollar yen. The setup to China is this, right? It's busy still in China. We have the MLF in just about 18 minutes or so. We have the data dump. We have new home prices and old home prices all coming out as well in the next few hours as we kick off, of course, the third plenum, Dave.
Yeah, the first third plenum that focuses on the economy in about 11 years. Of course, the last one we actually had was back in 2018. More on that in a moment. To Yvonne's point, of course, we did hear, again, it should be worth noting, from President Biden. He spoke earlier calling on Americans to cool down the heats in terms of these political divisions. That's after, of course, his presidential rival, Donald Trump, was shot at a campaign rally in Pennsylvania over the weekend.
There's no place in America for this kind of violence, or for any violence, ever. Period. No exceptions. We can't allow this violence to be normalized.
Let's bring in our Bloomberg political news director, Jody Schneider. She joins us now from Milwaukee, of course, days ahead of that Republican National Convention. And, Jody, it's interesting. We haven't really heard from the president this frequently, right? I think this is the second time we've heard him in a week. The fact that he made this rare oval address, what do you think is the strategy among the Democrats now after this weekend's events?
Well, you're right, Yvonne. We don't usually hear from the president in the Oval Office. We don't usually have weekend addresses. He was at his weekend home in Delaware when the shooting of his rival, former President Trump, occurred. He came right back. He first gave a statement, written statement, and then went to the cameras soon after the shooting for a televised statement, and then tonight in the Oval Office came out. His message was pretty clear that people should come together, that there was no place for this political violence in America, even in a heated election year. I think the strategy is twofold. One, he is the sitting president of the United States. He wants to do the kind of what we like to think of as comforter-in-chief role in a moment of crisis to bring people together, say it's going to be okay. But secondly, he is campaigning to keep that office. And in so doing, he wants to use this as a little bit of a bully pulpit. And the bully pulpit now is to try to say we want to stem political violence in America.
Now, Jody, on the other side of the spectrum, we understand, of course, that former President Trump has arrived, of course, and he did arrive, of course, I believe on schedule. I think there were conversations from maybe needing to push it back a few days because of what took place. Get us up to speed what exactly is happening at this point in time where you are.
Yeah, so President Trump, he had that famous fist in the air just after being shot at that rally in Pennsylvania, saying he was going to fight. And we've seen some missives from him on Truth Social, basically saying, I'm going to be, a fighter, and they can't take me down. And he did arrive here on what they call Trump Force One to address the convention this week. We still are waiting for his vice presidential pick. That would have been the big news this weekend, right? We all would have been talking about that, who it might be, when it might come. But now we're talking about the fact that he was shot and other issues like the Secret Service and their role in this, and why perhaps he wasn't better protected, why there was a shooter on the roof. We've already heard from some congressional chairmen on Capitol Hill, Republicans, saying they are going to call the head of the Secret Service to the Hill to testify about what went wrong there. But President Trump thus far has seemed to be indicating he's going to come and unify the party. And of course, this will make him an even more popular figure in the Republican Party. This will be, in effect, a coronation of him as their nominee for the November election.
Jody Schneider in Milwaukee for us, our political news director, joining us, of course, to just really get us up to speed and set the stage for us. And what really, even before the event, was already a big event. And, of course, certainly because of what's taking place, has taken on just a stratospheric part of the conversation here. Let's bring in our first guest. This hour. Clayton Allen is the director for the United States at the Eurasia Group. Clayton, first, a pleasure to have you join us. Good morning from the Asia Pacific, sir. Just your initial thoughts and what is going through your head right now?
Well, first, thank you for having me. And I would agree with Jody. Look, this event has sort of restated or reshaped the baseline of the campaign. Trump looks a lot stronger. It's not that we're going to see a massive bump in the polls for him. This election was always going to be close. It will remain close. But the issue now, or the thing now, is that Trump's base of support is solidified. It'll be much harder for him to lose ground, and by exchange, it'll be much harder for President Biden to make up ground against President Trump. The other side of this, I think, is maybe a little bit underappreciated. It's essentially overshadowed calls for Biden to drop out. And Biden's position as the Democratic candidate looks much more secure than it did even 3 or 4 days ago. So I think that, if anything, this event has strengthened Trump. It strengthened Biden's position within the Democratic Party, but he's certainly not the stronger candidate right now, in our view.
Clayton, how long do you think, this is really going to help Trump's campaign? We're still talking about 4 months away until the actual election. Are we overstating the impact this could potentially have?
We absolutely could be. Look, think back to history. This is absolutely, a relatively unique event. It's the first time since 1981 that we've seen an attempted assassination against a president or presidential candidate. So we're a little bit thin on maybe historical comparisons, but Reagan's poll numbers spiked immediately after the shooting, but within a series of months had declined to the levels that they were at, or even below the levels they were at before the attack. There are certainly some thoughts that this could be overshadowed by any number of events that take place between now and the fall. I think the important thing to keep in mind now is, yes, we think Trump is a stronger candidate today. We think Biden is relatively weaker. There's 3.5 months left to play in this election, and there's a lot of things that can happen. This election has been nothing short of packed with news. We don't expect that to change in the next 3.5 months.
Yeah, and Clayton, to your point, we don't really have a lot of historical parallels, let's put it that way. In what way do you suspect, if at all, that this changes the mindset of Donald Trump? Will this have a policy implication, for example, or are we just thinking too far ahead at this point?
I think that might be putting the cart a bit before the horse. We don't know Trump's personal reaction to this. There's been a little bit of reporting today that he seems to be somewhat reflective over what was a very near miss with his life. We don't know that that will necessarily hold, and we also can't really make by extension, can't make predictions about how this might shift Trump's personal thinking about policy. One thing we do know is that the RNC is sticking to the messaging that they've designed around their convention. That alone suggests that the tenor of this week will probably be largely as it was from a policy perspective before the shooting. Obviously, the main story will be, look, this is Trump risen like Lazarus coming into the Milwaukee with the weight of kind of having survived, the weight of having been sort of put through the test and then come out the other side. He's absolutely going to be a force to be reckoned with in Milwaukee, and I think that that's going to be the dominant theme rather than a shift in policy.
Yeah, markets basically have swung in a way that after this incident that Trump as president is almost a done deal in some ways, Clayton. I'm just wondering, are we talking now about a potential Republican red wave that's in the cards now?
I think that that can't be discounted. You know, I would look at this and tell you our view is that Trump is certainly the stronger candidate. We put 75% odds on him emerging victorious in November. Within that, I think that the Senate was always going to go Republican or very likely to go Republican. We think it's 95% likely in a Trump victory, you get a Republican Senate. Similarly, the House, you know, down ballot races, a strong Trump at the top of the ticket is going to pull a lot of people along with him. The coattail effects will be relatively strong. For that reason, I think that unified Republican control is a high likelihood. Now, red wave would indicate that there's a massive majority in both chambers. I don't think that's likely. I think we end up with a narrow Republican majority in the Senate and probably a narrow but workable majority in the House, assuming that Trump wins in the general election.
And, you know, Clayton, you know, from our perspective, looking at this, you know, we're sitting in Hong Kong. We're looking at this, and it certainly does cast a fairly negative light on what's happening in the U.S. I mean, we all know about the deep political divisions there, but really to this extent that, you know, we're talking about an assassination attempt. And I'm wondering whether, paradoxically, let me put it this way, paradoxically, there's something poignant about seeing someone bloodied emerge with his hand up in the air. And do you think that this actually brings together the two sides unexpectedly so more than it actually divides them, for example?
Look, I agree with you entirely. The image from this campaign that's going to be in history books 10, 15, 20, 100 years from now will be Trump with his fist in the air, bloodied from an assassin's bullet, framed by an American flag and Secret Service agents. I think that right now you're seeing individuals on both sides of the aisle, Republicans and Democrats. President Biden's House Speaker Mike Johnson, chief among them, call for unity. At the same time, though, you're seeing parts of each party, inside, in office and out, sort of retreat to their partisan corners. J.D. Vance and Tim Scott, two of the frontrunners for vice president, offered up statements that really repeat a lot of the themes of it's us versus them. It's an antagonistic frame for politics. Those, I think, are much more indicative of where we're going to get to in the next several days. If anything, I think this ultimately forces both parties further into their partisan corners.
You mentioned Biden maybe is more, I guess, safer today just in terms of being that Democratic ticket. Can you tell us a bit more why? I mean, yes, in some ways, this is overshadowing all those calls for him, the growing calls at least from Democrats for him to step down. But what is going to be the strategy among the Democratic Party now? How can they actually shift the dynamics moving forward?
So look, Biden's game has always been to build a big enough base of support within the party, not to allay people's fears, but to preempt or outmaneuver efforts to reach a critical mass of Democrats pushing on him to step down. This story shoves Biden's age off the front pages. That means it's going to be impossible for Biden's opponents within his party to reach that critical mass. And for that reason, Biden looks safe. He's the one who's going to decide if he remains in the race because legally he's the one with the most delegates. He's heading into Chicago with a clear sort of edge, clear lead in the election. If he doesn't step aside, there's not really an option to cleanly replace him. You end up with a contested convention that serves no one's interest. I think Democrat strategy from here on out is trying to reframe their message, perhaps shifting away from the idea that Trump is a threat to democracy. This weekend's events certainly undermine that message, and shifting instead towards rebuilding their base, motivating voters who would be incentivized by Biden's economic achievements or other policy aims.
Clayton, just very quickly, you've advised investors and businesses, going into uncertain elections, for example. Has your advice necessarily changed from this time last week? Not to trivialize, of course, what took place over the weekend, but I'm wondering, do I need to be shifting my lenses slightly because of what took place?
I don't think so. I think that we were strong on Trump last week. We viewed him as the stronger candidate based on race fundamentals and polling and swing state data. This week is no different. I don't want to trivialize this weekend's events either, but I think it reinforces a dynamic rather than shifts it.
Clayton, thanks so much for joining us. Clayton Allen there, director for the United States at the Eurasia group as well. In terms of what to watch out in China here today, of course, there's a lot going on. Day one of the Third Plenum kicks off here today. We might not likely hear anything really until maybe later on this week, maybe Thursday or so, but certainly we're watching that very closely in terms of the policy directions, the reforms that could come out, and whether or not we do see any sort of talk about stimulus. You take a look at when it comes to what markets are doing. Obviously, the CSI 300 did snap last week out of those 7 weeks of losses. So rising China turnover is one thing we're watching as well. The 50-day moving averages for your HSI, HSCEI, that one-year MLF is just about 5 minutes away. And of course, June new used home prices will be at the bottom of this hour, followed by the activity data. But yes, keep in mind, we mentioned that Statistics Bureau is going to be skipping that briefing later on this morning after that data dump here because of what's been going on with the Third Plenum.
Yep, cutting down to the open of trade, and of course, alongside that, as Yvonne is pointing out, the release of new home prices for June, the opening bell 14 minutes away. This is the China Show. Welcome back. You're watching the China Show. We'll take you straight back now to live pictures in Milwaukee, and of course, where just about an hour back or so, the former president and of course presumptive nominee from the Republican Party, Donald Trump, of course, just arrived there for the Republican National Convention. Elon Musk over the weekend, following, of course, some of the incident, of course, coming out with this. I fully endorse President Trump. Jamie Dimon also coming through, not so much politically, but talking about how he stands firmly against all acts of hate.
Yeah, I believe it was Elon Musk and Bill Ackman that both were quick to endorse Trump after this weekend's attack. Let's bring in Sean Taylor, CIO and portfolio manager at Matthews Asia. I mean, obviously you're seeing a little bit of this kind of the flows into these Trump trades. Yeah. I mean, does anything that this weekend change anything for you on how you look at U.S. assets now?
I don't think it does, but I think the market probably hasn't been pricing in the likelihood of a Trump victory as much as it should have been. And so you might find that sort of seeps in over the next couple of months. But, you know, what would a Trump victory mean? It would probably mean more fiscal policy. It would probably mean more worries about tariffs. It would be good for US equities. It probably wouldn't be as good for US bonds. And I think here comes the conflict. We've just had a good week where CPI has been going down, the likelihood, I mean, the Fed sort of has no real excuse not to cut in September, but then this comes along. So it will be interesting. I think that's where the tension will be.
Does it keep the dollar up?
Yes, I think it does. Well, the dollar's, you know, yet again, with the CPI data over the last sort of 10 days, the dollar's come off. Maybe it was, you know, slightly more resilient European politics, so the euro's come up. Obviously, the election in the UK, the pound's come up. And actually, those markets that got really hurt, like Brazil and Mexico, have also seen the currency pick up. The yen as well, a little bit of support from the government. But I do think the dollar could go back to, over the next few months, the dollar could go back to its strength again.
What does it mean for your second half outlook? I know for emerging markets, you still think fundamentals look pretty good as well. But as you say, there's still a little uncertainty about how this U.S. Election is going to play out, especially if we see capital coming out of China to U.S. assets on the tariff risk.
I think the most important thing to point out is that Asia has done well this year. We've had some quite positive returns. I mean, China was participating in that until, May the 17th, and then has lost it all. But the rest of the markets have done well, particularly India and Taiwan. And I think our basic thesis that Asia is picking up GDP-wise, it's going into earnings, it's cheap relative to the US, and it's under-owned, it still maintains, but it's where the balance is. We were looking for two more drivers towards the second quarter. One is rates coming down, and that would see a switch into the more rate-sensitive markets like ASEAN, like Latin America in EM context, and also China. and seeing a cyclical pickup in China. And obviously that's got to be much more to do with China policy in the next couple of weeks.
Yeah, and certainly the data hasn't showed us any strong sign of that. Sean, just very quickly here. So we're looking at the PBOC right now, among the many things we're tracking on China today. So there's a medium-term lending facility operation. The rate is unchanged. It's $100 billion that they're conducting, which means that they've taken money out. $3 billion is the net figure coming through. So effectively, if you look at it for the last 5 or 6 months, they've refrained from injecting net cash via this specific channel into the markets. And of course, the next landmark will be in 8 minutes' time, the housing market data, and of course we go through the activity numbers coming through. Sean, we'll talk more about China in a moment here. Do I then stick with the winners until the rates come down globally? Like, if it's Asia, it's India, Taiwan, and Japan. If it's otherwise, it's otherwise.
Absolutely, and I think in Japan it's hedged, because I think the currency is going to come under currency, come under pressure still.
Yeah.
Yeah. I mean, China's trapped in a way. It can't really lower rates. It can't put more liquidity in the market because the interest rate differential's too much. It's the same with the yen as well.
Okay, Sean Taylor will be rejoining us in a couple of minutes, CIO Portfolio Manager at Matthews Asia. Look at futures right now going into the Monday open, 0.5% to the downside on the Hang Seng Index. The open 7 minutes away. This is the China Show. Right, welcome back. Going into the open, a weaker moves across the pre-markets right now. The PBOC one-year MLF unchanged, refrained from injecting money into the system for a 5th straight month. And in a couple of minutes, we'll be getting the new home prices and used home prices too. And just to remind you, in case you forget, we're now at 12 straight months on month-on-month decline for new home prices. The last month actually saw the steepest monthly drop. This is across 70 cities. You take, I think it's the average, the steepest drop in 10 years on prices month on month.
Yeah, we really haven't seen the data turn in any way since, of course, that rescue package that was announced. So I think the Nomura Tinglu was basically expecting, in this plenum or even the Politburo meeting, expect more property stimulus to come through that are actually bolder than what we heard back in May as well. In terms of stocks to watch, obviously the property sector is something that we're watching out for, of course, as this plenum kicks on. Last week, we certainly saw a bit of a rally in some of these stocks here, just in anticipation of some measures that could be announced here. We're seeing a mixed bag here across some of the developers here this morning. Crypto stocks, though, certainly in focus as we talk about these Trump trades. And Bitcoin certainly is a Trump trade in some ways. 61,000 for Bitcoin here right now. You see the likes of OSL Group up some 2.5% or so, but certainly that's one thing to watch. Yes, it's a Trump trade, but also people might be seeking a bit of a safety here. Maybe it's not the traditional haven, but Bitcoin is certainly seen as something that is emerging as well as a haven.
Because he has emerged as a more, to your point, a crypto-friendly candidate between the two, right? So, yep, we'll have more on this. Of course, some of the related stocks. The open is just ahead. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting down the open of markets here, and certainly that dollar strength coming through following this weekend's events in Pennsylvania. The assassination attempt of the former President Trump certainly is rocking these markets here this morning, but we are on tap for a lot of data coming through out of China at the top of the hour, a couple of seconds away from new and old home prices in China. And we just got that MLF unchanged for this month.
Yeah, and no new money coming through in the system, 100 billion, so they've taken out 3 billion renminbi in open market operations. It's busy. It's worth noting, as we were just reminding our viewers earlier on, we will still get the data coming through today, activity numbers and the GDP print, but we won't get the press briefing out of the NBS because of the third plenum that is kicking off, of course, today. So we'll see, of course, what that looks like in terms of data, although we probably won't have a lot of detail around that as the event progresses. Of course, it's usually towards the end of that. And of course, last time we had it was back in 2018, so that's quite a bit away. Third of 1% to the downside. Just keep in mind we were able to snap out of that 7-week skid on price last week. Turnover did pick up the last 3 or 4 days last week on the mainland. Look at some of the big movers bottom of your screens. Not really a lot in terms of news flow on the individual stocks on these large caps. Let's flip the boards. Please have a look at Hong Kong and how we're doing here. In the city, 0.5% to the downside, and that's exactly where we're trading right now. We did manage to see quite a steep rally into the close on Friday, which actually put us very close to the 50-day moving average, which at this point in time we're retracing a little bit from that. That might be certainly the next level to watch to the upside if we were to move up very, very quickly. Right. There is one stock that we're tracking, and this is really dependent on what's taking place news flow-wise, right? So this is a company, it's up 10%. It's limit up. It's Ysoft is a company that's traded in China. The Chinese name of this company sounds like Trump wins big, and every time you get positive news flow on Donald Trump as it pertains to the election, this is what happens to the stock. And yet again, 10% up.
Speculation.
Yeah, almost like clockwork. Property prices should be out anytime now. As you look at these prices, I think we have the numbers coming through right now.
Okay, so we're taking a look at it here right now. New home prices falling. There you go, 0.67%. These are month on month. So basically confirming that we're seeing a 13th straight month of property prices that are continuing to be in negative territory. However, things are narrower in terms of those falls now from the previous month. Existing home prices, that's also falling some 0.85% month on month too. Yeah,
okay, so the data is not showing just up yet as far as the some of the easing measures are concerned. So there's conversations around what moves to buy inventory, providing support financing-wise to developers, and of course some of the measures that have been relaxed across virtually every single major Chinese city to bolster sales. Maybe let's give it some time. I mean, the last of those announcements came a few weeks back. I think it was Beijing. So it's very recently since they've unshackled some of those limitations. Let's see what happens, of course, when it comes to this. Now, China has issued a short statement, of course, and this goes back to the assassination attempt on the weekend. A short statement offering President Xi Jinping's sympathies to Donald Trump following that assassination attempt. There has been little else, though, from Beijing except for state media articles criticizing the deep divisions in U.S. democracy. Let's bring in our Stephen Eng, our chief North Asia correspondent, to talk us through that. And, of course, the third plenum that is starting today. Steve, why did you start?
Yeah, I mean, it just begs the question, is it enough? I mean, for the statement coming about Donald Trump as well as what could potentially come out of the third plenum. You just mentioned about the property woes. Obviously, that is a big one. But, again, on Donald Trump, it was just one line from the Xinhua news agency, essentially stating the sympathies for what Donald Trump went through yesterday, Sunday, in the United States. Again, it was the weekend. So there wasn't a foreign ministry press briefing. That could come later this afternoon. I'm sure the spokespeople at the Ministry of Foreign Affairs will be asked about it and see if there's going to be another crafted statement coming from Beijing. But state media did latch onto it and use it as an example of how essentially, I mean, the hidden meaning is that the socialist system of China is far superior to the chaos of U.S.-style democracy. They didn't use those exact words, but that's what definitely was being implied. Let's bring up the quote from the Global Times. They had a news article which was less on news and a little bit more loaded, but also this editorial as well, basically saying that increasing polarization is dividing voters and undermining trust in democratic institutions. U.S. is experiencing a significant pathological symptom, and the future of U.S. democracy hinges on these internal challenges rather than focusing solely on external strategic competitors. I wonder who that is. Who's the external strategic competitor? Yeah, that would be China. So again, state media, a bit strident, Global Times, a bit strident in their tone, using this as an opportunity to obviously discredit U.S.-style democracy.
Does it overshadow the plenum that kicks on this week?
I would say what's happening behind closed doors in Beijing, they're buckling up a little bit, obviously. This adds a lot of uncertainty. One thing I know about Beijing and the leadership there, they like certainty as much as possible and predictability. This adds a lot of uncertainty to the whole situation. And given that we don't know what's going to come out of the plenum, will there be a big bang like in 1978 when Deng Xiaoping essentially launched an openness policies, or 1993, I believe it was, when Jiang Zemin pretty much solidified the socialist market economy. 2013, Xi Jinping dismantled the one-child policy and also put enshrine the tone of national security. Are we going to see that, or is it going to be more mundane? Is it going to be tax reform to help the local governments? Is it going to be demographics, lifting the retirement age? Right now, 60 is the retirement age for men, as low as 50 for women. And they have an aging population, an aging workforce, so there could be some things like that. Or will there be new productive forces, teeth behind new productive forces at this time, given what's happening in the United States? Nobody is predicting that the geopolitical tension with the United States is going to get any easier. So self-reliance, new productive forces, AI, chips, and the like could get some more teeth.
Steve, thank you. Stephen Ingle there, our Chief North Asia correspondent, joining us. Still with us is Sean Taylor, CIO and Portfolio Manager at Matthews Asia. It seems like we're coming to the third plenum with quite low expectations, but is there anything you think that could actually move these markets right now in China?
I think that the fact that the expectations are low, if there's any positive news on something like the private sector, yes, that could. We've had quite a fall since May the 17th, but I can't see it. And I think, Stephen's right, they're going to be focusing on the long-term structural issues. Maybe there could be a bit of a relief if the market's been very worried on consumption tax recently. And so if that's cleared, there has been a rumour that the consumption tax goes from being taken by the central government to the regions, and that could be quite positive as measures for consumption. I just think the key question is, where's the growth driver? Where's the long-term growth driver? And I think that's what people are looking at. We could have some more cyclical news at the Politburo meeting at the end of the month, which would probably be more positive on the market. But, I think you just mentioned it, David. 2 weeks ago, Beijing implemented the rules around May the 17th announcements. That means they're not in a rush. And that means any data now isn't going to be looked at. They're going to start looking at this at the end of the year, in my view.
Well, it's going to take a while for the data to change. What do you guys own in China right now, just broadly?
So we think that, look, the internet, we're very selective, but we do think the internet e-commerce companies are the best at the moment. We have had quite a lot of dividend yield stocks. We're sort of rotating out of them because they've done quite well. But the internet, you've got self-help. Yeah. So as in, they're subsidising less. Yeah. So the earnings are coming through. They've been upgraded, and you're beginning to see more self-help in terms of like your total return, in terms of buybacking of shares, increasing of dividends. So that's the safest area. But yet again, it's not our favourite market. We prefer North Asia.
Yeah, it's interesting when you mentioned, we talked about Taiwan and India in the last segment. And in terms of just the weighting and how people are looking at these markets now, it's basically have surpassed China and EM portfolios. I mean, is that a continuing trend that you think that can stick? And are we likely to see these markets actually maybe overshadow China in terms of market weight?
Well, I think so. I think, as we saw last week with the CPI data, there is a huge chance of a short-term rotation. If Nvidia and the other stocks in the US correct like that, and we have a rotation into more broader market, Taiwan will correct with that. Yeah. But I think that will probably be a good opportunity to add. So what we're doing is we're trying to look at stocks that haven't got so much momentum in them, but still have the same themes. Because we don't have to take a bet in Asia on AI working. We have to take a bet on the capex. These AI companies in the US, revenues are increasing. They're spending a lot more money, and Taiwan and Korea are major beneficiaries of it. Yeah, and Japan as well.
Yeah, those are the customers, aren't they? That's almost a direct transfer of revenue. How important are these upcoming earnings in the U.S. for you?
Very important.
Okay, what are you watching closely there as far as the mega cap anything else?
I just think you're going to see the same trend. I think what's going to be interesting for the overall CPI and rate story is how the small caps do, because obviously that part of the market has been really discounted, and is it as bad as it seems? And what's happening on the employment side, because that could be the change that the market's not looking for at the moment, is if unemployment starts to rise, and that will obviously speed up rate cuts.
How important? We talked about the election risks in the U.S. We've seen it in India. We've seen it in Mexico and in the EM parts of the world as well. How important is country selection now when you look at stock selection?
I think it's crucial. Yeah. I think you've got to. I think you're buying stocks, but you've got to make sure you buy them in the right environment. And that environment is pretty bad for some countries and pretty good for some countries. So it's not that you just allocate to a country, you just have to be aware of the country risks.
Yeah, well, that brings up maybe just a mental exercise, right? Is the reason, let's say the Chinese markets had a good AI play. Do you think that stock would do as well as your TSMCs, your SK Hynixes of the world? Or is the premium that is built on this Chinese market also going to affect how well that stock does, for example?
I think it would do well relative to the China context. I don't think it would do well. I think Taiwanese stocks haven't done as well. They still are trading at a massive discount to US stocks.
Right.
And I think some of that is because they're not in the US and they probably don't have the same corporate governance standards and the same consistency of earnings. But there is a political risk there as well.
Okay. So what do you think is going to drive China, the equity market? Is it going to be earnings, or do you think it's going to be on valuations moving
earnings.
forward?
I don't think people go for valuations. I think there'll be this constant trend that northbound investors will buy Hong Kong because it's cheaper and you've got dividend payouts, and they'll be more defensive, and then they'll probably get more aggressive if earnings change. But I think internationally, people will look at earnings. You don't, say 4 or 5 years ago, before the sort of changes in the guidance on the private sector, China had good growth. The companies were earning, they were being very fast earnings. But, now you've got more opportunities. Japan's working, Taiwan's working, India's working. The moment rates start to come down, we can start to put more money in ASEAN. So I think China's got also competition for fund managers as well.
Right. And you mentioned in the earlier segment how well stocks have done in the first half.
Yeah.
What is the tilt overall in your portfolio? Are you more conservative? Are you more aggressive right now? Is the bulk of the gains behind us, or do you suspect we could repeat that?
I mean, I think we could overshoot, but we're not taking that chance. We're taking some protection in the portfolios, and if you've got portfolios that have got over double digit, you're coming into one, uncertainty over China policy, and then the summer's always a particularly volatile time anyway when people are away, and then we're going into election season and also rates. So, yeah, I think it is time to just be quite careful.
Right. Sean, thank you for spending time for us this morning, of course. Have a great week ahead. Sean Taylor, the CIO, Portfolio Manager at Matthews Asia. Just ahead, of course, here in the China Show, we'll be digging deep into the third plenum. Of course, in the next hour, our guests from Hang Seng Bank China and the Center on Contemporary China in the World will help us understand, of course, Beijing's longer-term policy directions and, of course, the growth picture as you look ahead beyond the next 5 to 10 years. Plenty more ahead. This
Welcome back to the China Show. Just recapping the data that we got when it comes to new and old home prices and in terms of what we saw in the news. So solidifying that 13th straight month of monthly drops when it comes to, of course, those prices. But, the drop was narrower than what we saw from the previous month as well, but doesn't really go too far in telling where we are in this recovery story, certainly, Dave.
Yeah, well, the difference was 0.04.
If you had to do the math,
percent, yeah. Christy Hung is with us right now, our Bloomberg Intelligence China property analyst. What has the outlook changed, I think is the question. We have this conversation every month, but I'm wondering if we could just replay what you said last month.
Yeah, so there is sequential increase in June sales.
Okay.
But that's kind of expected because every year there's seasonality. June is always better than May because of developers' mid-year sales push. What worried us is that with this recovery, we see it's very lopsided. It's skewed towards just larger cities and larger state-owned developers. And a lot of people are headed towards buying second-hand homes instead. So that hasn't changed. And we are still seeing hurdles to broad-based sustainable recovery. Usually stimulus was introduced in the past wave. We see sales boost for 2 or 3 months and that's it. So overall, we still see hurdles to a home sales recovery because people are insecure about their jobs, and also there's pessimism on home prices. You see there's home prices has been gone through a correction for 2-3 years now, and people are still asking for where's the bottom and when is it going to bottom out before we want to get in the game and buy a property.
So what are your expectations then as the third plenum kicks off? I mean, are you expecting any policies to counter this housing slump?
Right. So we have that 300 billion yuan lending quota that's been announced. But so far, there's been very little implementation of local governments going in to buy unsold properties from developers. So that is disappointing. So we do expect the government to provide more incentives to accelerate the process of restoring supply-demand balance in China, because there's just so much inventory out there, not only in the new homes market, but also in the secondary listings. And also, we also expect more demand-side policies coming out, but I think this time around it would only apply to T1 cities, because down payment ratios are at 15% for most of the cities in China now. And also mortgage rates are approaching 3%. These are all-time lows.
Yeah.
So that's very limited ammunition for the regulators to introduce more demand-side stimulus, and that's one of our concerns too.
All right, Christy, thank you. Christy Hung there, a Bloomberg Intelligence analyst, reacting, of course, to those new home price data that we got. Of course, you can turn to your Bloomberg as well for more on today's data dump from China. Might be especially crucial here today, given we're not going to get that presser from the National Bureau of Statistics here today. T-Live Go. Get plenty of more analysis from our expert editors here this morning.
Let's look at some big corporate stories at this point. So the Financial Times says Goldman Sachs is appealing its results in the Federal Reserve's latest stress test, which would require the bank to hold more capital. According to their sources, the move comes after CEO David Solomon said the result did not reflect Goldman's efforts to make its business more stable. Now, a source says Alphabet is in talks to acquire cybersecurity startup Wiz. We're told the transaction could total as much as $23 billion, making it Alphabet's largest acquisition to date. Now, last week, Google's owner reportedly shelved efforts to acquire customer relationship management firm HubSpot. Right, that's a wrap up some of your corporate stories. Just ahead, of course, look at some of the big movers within this equity market where tech stocks are leading declines, at least here in Hong Kong, down about 1.6 on the gauge on the Hang Seng. This is the China Show. Welcome back. You're watching the China Show. Some of the reaction that, just to get you guys up to speed, and some reaction here from world leaders to the attempted assassination on Donald Trump on the weekend. So this one we'll start things off here with China, and following, of course, the incident, the President Xi Jinping expressed his sympathies to Donald Trump. It was, I believe, a 1 or 2 line, very, very short there as far as that's concerned. Out of Japan, we had the Prime Minister Kishida saying that he stands firm against any form of violence. Turn the page and have a look at Australia. Anthony Albanese talking about how any act of violence is an affront to democracy, and South Korea is appalled by the hideous act of political violence. And this is a partial list of what we've heard and seen so far across the world. Yeah, certainly you're hearing a global reaction to all of this as well. And really the big question for markets and for those watching the political drama is, how does this weekend event dramatically change, if any, the dynamics of this 2024 race now? Yeah, we did hear from Eurasia Group saying maybe this does strengthen Trump as the Republican candidate, almost like a coronation of sorts. And also in terms of Biden, maybe this makes him the clear Democratic candidate as well, because, this event has basically overshadowed all those calls for him to step down now. So maybe that helps in his strategy in some ways as well. But yes, it's still testing times. We'll see how long these moves that we're seeing across these markets are going to last at this point. Yeah, well, so far, if you're joining us right now, it's you have to contend with higher cryptocurrency space, number one. Number two, you're contending with a stronger U.S. dollar, for example. That's showing up in markets today. Curiously enough, but unsurprisingly so, the stock that is traded in China that has a Mandarin name that sounds like Trump wins big in Chinese is Limit up again. By the way, we tend to get the stock do this whenever you get positive Trump news as it pertains to the U.S. elections. This is number one. Number two is you also have a trading debut today. GL Carlink, there we go, on your screens, up 10.2%, oversubscribed. I think 2.5 times the IPO here in Hong Kong, and some of the earnings things coming through too. You have China duty-free prelim numbers, 3.3 billion, Weichai Power, 40-60% net income on the way up, and some of the other, I'm not going to bore you with some of the other. There's a ton of earnings guidance coming through as well, but here's some of the market reaction there. More importantly, though, as we take a step back, the macro story is really the data that came through on Friday and the data we're looking ahead to in China in a couple of minutes. Right. I mean, basically, when we saw the credit data, I think we hit those record lows for some of these sort of money supply growth in general. So basically, you're not seeing that credit impulse there. And maybe is this a sign of this new normal that Pan Gongsheng did talk about, right? They're not expecting credit growth to be one of those targets for them when it comes to generating growth anymore in the Chinese economy. In terms of what we're expecting in the GDP data, the data dump that's about to come out in just about a few minutes or now, I think the consensus still thinks that we could still hit and punch above a 5% of, above that target of 5.5%.
0%. So 5.1% is what we're thinking in terms of the year-on-year numbers. But yes, it does show a little bit of a slowdown from what we saw from the previous quarter. In terms of breakdown, industrial production, retail sales, fixed asset investment, we're still looking to see maybe some softer numbers across the board here today. Industrial production, a 5% print is expected as well. What else are you watching, Dave?
Yeah, I'm going to give our viewers some of the ranges here. So if it comes in near those edges or outside of it, maybe you could expect some market reaction. So industrial production on your screens is the midpoint, 3.8% to 5.4%. That's your sort of playground. Retail sales year-on-year, 2.8% to 3.6%. And for fixed asset investments, it's 3.8% to 4.1%. Within the data, of course, it's things like investment in property year-to-date. We did get home prices coming through about 25 minutes back, which showed a 13th straight drop month-on-month, although the drop in June came in not as bad as the drop in May, so by a couple of basis points, if you will. Market reaction so far has been generally negative, but it's also been a day where there's caution is the name of the game. We're mixed across the Asia-Pacific. Yes, you are getting some bright spots coming through as well, but we'll keep you guys updated, of course, on all the market data. And, of course, you're looking at the data coming through out of China. For clients, TLI Vigo takes you to this.
Yep, plenty of commentary analysis from our expert editors. Of course, that data dump just moments away. Keep it here. This is Bloomberg. Welcome back to the China Show. Here's a look at the CSI 300 just a half hour into the session. We're going to take a little bit of a shift away from what's been going on, the political drama and turmoil that's happening in the U.S. over the weekend, to really what's going on in China in the next few seconds or so. That data dump should be coming through here any second now, whether it's GDP, industrial production, retail sales for the month of June, certainly what we're looking out for. We did see the new home price data, Dave, earlier coming through, not really changing much in terms of trajectory, though home prices falling for a 13th straight month when it comes to new home prices. We talked about it's a narrower decline, but still a lot of questions on whether we still have yet to hit that bottom or not when it comes to the property market as well. And an MLF that was unchanged as well. Yeah, no new money coming through fifth straight month. And of course, seasonality, of course, in focus because of the typically in June, that's when you get the developers, of course, starting to push more sales, given, of course, it is the end of the first half. And just keep in mind, it's busy for our data. So we're coming off a day on Friday where we did get $100 billion trade surplus for June. That's number one. And then you also did get the credit numbers coming through. We have the GDP numbers coming through for the second quarter, coming in slightly below. And I say slightly below because this is probably still within the range of reasonable forecasts here. 5% growth for the second quarter. We're coming off a number of 5.3%. The median estimate is for 5.1%. Okay, so yeah, as you say, we're still hitting that target, but then again, it is a weaker print than is expected when it comes to the second quarter in terms of growth here as well. So certainly we have seen the data of late in the last month or so really kind of turn a little bit more negative on China as well, which it begs the question, where are we and what phase are we really in this China recovery here? Year-to-date numbers also coming through at 5% here right now. That is also a miss. We're still waiting for this the drip feed of this data to come through.
The monthly numbers
slower than expected, I have to say. But there is one that came out. Residential property sales year to date coming through. That is negative 26.9%. So close to 27% drop there.
Okay, yeah. Well, we wait for the other sets of numbers, and I promise we'll break them to you as soon as possible. Let's just have a look at markets where we are in terms of the hang. Oh, yes. Go ahead, Yvonne.
There's a correction, though. I got to bring it up here. So it doesn't look like it was 5% now. GDP growth now looking more like 4.7%.
Oh, that's a bad number.
For the second quarter. I believe that is, so we want to make that clear. That is a correction on our part there this morning. So that is quite a weak print then, if you look at it.
Yeah, let me look at that against the range of what we were expecting anyway. So 5.1% was the median estimate. The range was from 4.6% to 6%. So this number coming in very, very close to the low end of forecast coming through. We are now getting the industrial production numbers, Yvonne, coming through.
Okay, that one at least is looking a little bit better. 5.3% is a beat. 6% year to date for those numbers there. But look at that retail sales print. That's why you're seeing David react this way. 2%.
Yeah, 2% print year on year in retail sales, which should be the lowest going back to December of 2022 when we had a negative 1.8% print. And December 2022 was when China was coming out of COVID zero. So this is not a very flattering number on the retail sales front. We were expecting the range was 2.8 to 3.6%. So this one not only missed the forecast, it came in way below even the lowest end of the forecast coming through there as well. We're looking at now a bounce up in dollar China ever so slightly. Retail sales year to date, 3.7%. Forecast year to date was for 4%. And the jobless rate coming in at about 5% as well. Okay. Let's get instant reaction, shall we?
Yeah, let's bring in Dan Wang, Chief Economist at Hang Seng Bank China. We also want to welcome Cheng, Director at the University of Hong Kong Center on Contemporary China and the World. Dan Wang, I want to get your take on these numbers first and foremost. 4.7% GDP growth for the second quarter. What's your overall take?
It's a reasonable number given how much the housing downturn has accelerated since April, but it's disappointing. And a lot of people had anticipated more of a positive reaction from housing stimulus, and judging by the number, it didn't work. And then when it comes to this growth, it's actually more accounting than growth because it's mostly because of the trade surplus. So net export is driving most of the growth. And it looks like the consumption weakness might last throughout the rest of the year as well.
Yeah, what do you think about that 2%? I mean, 2%, it's effectively, we could be saying 1%, and that really doesn't say a lot too. Effectively zero if all things equal. Are you surprised by how weakness has actually come in?
I'm a bit surprised about the consumption data because there were supposedly to be some program to stabilize the consumption on the local government level. Probably the replacement of new goods or the new energy, more energy-saving products, right. Replacing the old, it didn't work. Maybe the fiscal revenue was constrained in some way. So I can see that for many companies, the restructuring was actually accelerating in Q2. So that has put more constraint on the income that people can use to spend. And also the housing downturn, of course, added more negativity on consumer confidence.
There's talk of a consumption tax, some sort of overhaul that's needed that could come out of this plenum, Dan Wang. I mean, yes, local governments will certainly want that. I'm just wondering, is it the right time to be doing this at a time when consumer sentiment is still quite weak?
The timing cannot be worse if we actually see a consumer tax coming out now. But I can see that the government has to put priorities on what they want to do first. It seems that the local government finances is more of an urgent matter that need to be addressed. And in the past few months, we have seen more news about the efforts to prevent more tax evasion and some more talks about not just to jack up the consumer tax, but also value-added tax. So if that happens, it's going to be a very contractionary scene in China, not just on the consumption side, but also in investment.
That leaves us with the export numbers, and I'm sure you saw that blowout, that surplus numbers we had on Friday, $100 billion. Good thing, and do you think that continues moving forward, the export picture?
The export has been beating the market expectation for a few months now. One big driver was the higher demand from the European market. Actually, the infrastructure spending cycle in both Europe and the U.S. has been going up. A few of the major central banks also started to cut interest rates, which is good for China's export. But then for this number, we can notice this weakness and protracted weakness in import, and that suggested a weak domestic demand that's not easily to be turned around. But throughout the year, we actually think the export might hold up relatively well, with the exception of EVs, because a lot of countries are jacking up their tariffs targeting Chinese EVs.
Okay, let's bring in Li Cheng now, of course, to look at the broader part of the conversation here. Dan Wang, of course, stays with us because apart from the release of the credit numbers coming through, it's the first day of the third plenum. It's I think the last one we had is in 2018. And before that was, of course, in 2013. But this one, the framing of this specific third plenum is really the first time in 11 years we're getting one that might be focused on the economy. What are your expectations?
Well, certainly it's a very major meeting, and China is the second largest economy. And the Chinese leadership determined to announce its so-called Chinese-style modernization and with a new model of growth and a new model of China's development. Now, Chinese leadership may think that the number is low, but it's very much expected as the one you just announced. This is very much in line. They need to shift from previously the property development-driven growth and export-driven growth, and also in terms of a huge IPO. These are all they're on hold, all in trouble. So they wanted to emphasize science technology development and also try to reduce the barriers in domestic market, so-called the national market. But most importantly, the financial reform is also on the way. On the one hand, it's Chinese financial de-risking with the outside world, but on the other hand, is try to give the local government more leverage in terms of tax and many other things. I think that for intermediate term or long term, this can emphasize on innovation, emphasize China's development model, which emphasizes clean energy and e-commerce, and hopefully with China's largest middle class market, China will come back to a much better footing. This is the plan of the Chinese leadership.
Yeah, but Dan Wang was just talking about external pressures when it comes to these new productive forces. If they're going to be exporting them out to the rest of the world, they're going to be hit by tariffs or potential tariffs in the EU as well as the U.S. I mean, how does China contend with that? Well,
this is already Chinese leaders prepared for a long time. This is where the twin circulation come from when Xi Jinping announced 5 or 6 years ago. So this emphasis on domestic market does not mean that China can only develop by itself. The foreign investment, foreign engagement is a necessity, not a choice. So China will, again, enhance its outreach with Belt and Road country, especially with ASEAN country. From their perspective, Europe also desperately need China. And I think that the European views, even in EV and the other new energy, differ from U.S. So they will work on that. Of course, it's a big challenge.
Dan Wang, your expectations for this week, and if not this week, we also have a Politburo meeting coming up. What lens are you looking at these events through?
The biggest expectation from where I stand is more details or clarifications on the financial reform, because the Chinese banks probably are in a very serious state right now. The profit margin is squeezed. The bad loans are accumulating, mostly related with the housing market. And there were already a lot of the consolidation of smaller banks into bigger ones since last year. But still, it's hard to see how this whole thing can be resolved in the next few years without a stronger centrally backed program. And there are a lot of new regulations added to the industry as well. So it sounds like the central government would like to reduce the share of financial industry in the economy to make it more as a focused banking system supporting the real economy rather than speculation. But in this adjustment, I think the credit issuance and banks as an entity to bear more risks would be diminished, because right now what we have seen is that banks are going for the safe mode. They're heading to get more clients in like the state sector or in the emerging industry rather than focusing on the private sector or smaller businesses that are desperately in need of help.
Li Cheng, is that the big risk for China, that these Chinese banks are vanishing in some ways?
Well, it's not only domestically, but also internationally. Domestic is certainly there's a huge local debt. So you will see the government policy try to reduce the local debts through the state bonds and many other measures. And this is one. The other is China certainly concerned about China's vulnerability in the international financial system. This is what Chinese call financial de-risking from Chinese perspective. But overall, they think that they will accelerate the RMB development. It's, of course, not to replace the US dollar, but at least prepare the difficult scenario. But most important things is Chinese government that does not take a very simplistic view, either market or state. They will do both visible hand and invisible hand in terms of state and market relations. This has made China's economic miracle that maintain China's social stability. They think that China is on the right track. Now, how bad is bad enough in the Chinese economy? They may differ from the local governments. They may differ from the entrepreneurs. But the uplifted confidence is very, very important. It's hard, but they will try to deliver something. And so we will see how successful they will. But I think it depends on who you ask. For general public, particularly in remote areas, those people just got rid of poverty, moved to the so-called common prosperity. They will be thrilled with the new development plan. But also, scientist communities will be encouraged in terms of a lot of opportunities for indigenous innovation, China's self-reliance. There's a lot of policy will come out. But also, this is an opportunity for entrepreneurs. They may find some investment opportunities. So, of course, it will not have immediate impact, but at the long term, puts China in a very good position vis-a-vis the Western-led so-called decoupling, so-called technological sanctions against China. So China wants to be very strong in this area. So this is dominant theme. This reflects Xi Jinping's so-called new development production and new quality of production. So that's very much emphasized technological innovation.
How confident are you that China will be able to develop its own in-house technological capabilities?
Well, look at the past 40 years. It is a miracle in some areas when China just got off the Cultural Revolution. China was so bad, so poor. I think the thing is why Western countries are concerned about China, not because China's weakness, because China's strength. In so many areas, one after another, China catch up. In the areas of material science, China is already leader, world leader. And if you look at the publication of Chinese scientists in the top journals like Science and Nature, you see Chinese from not existed, whether Chinese national or overseas Chinese. Now about 1/3 of the authors are Chinese with the Chinese names in the Nature magazine. That tell you about how quickly China moved to one of the top countries in scientific development. Of course, China in certain areas like chips, like biotechnology, still lag behind, and the Western-led, US-led containment or sanctions against China, so-called relocation, decoupling, certainly hurt China. But inevitably, this will only make China refocus on innovation. Does not mean that China don't want to collaborate with the outside world, especially with the United States, but China is forced by this kind of decoupling. So they need to produce their own top scientists with new firms, new emphasis, new energies, and etc. Now, in EV and in aerospace development, you already see some very important developments.
Dan, I'll give you the last word. Obviously, this is a long-term picture that Li Cheng has painted. Let's look at just the second half and what the rest of the year is looking like to you as we get closer to, of course, that U.S. election risk, tariff risk, the like as well.
We still expect the export to hold up, judging by the demand situation in Europe and the U.S. They could be strong enough. But for the domestic economy, I see very little signs from the central government or central bank to really do more stimulus. And at this point, actually, the government should have tried whatever they can to generate some inflation so that it can discourage people from hoarding money. But the monetary policy is too much concerned about stabilizing RMB rather than stimulating domestic economy, so it's kind of in this stagnation. And then the only option left is some sort of massive deficit financed large projects. And right now, it's hard to see what this kind of project is. Maybe think about what happened in 1930s in the U.S. Their economy was in deep trouble, but then the biggest deficit finance projects was World War II, and then that essentially put the U.S. out of that big mess. But for China, a project like that is hard to come by. Maybe the Belt and Road, maybe something else, but the number one priority is still the government needs to secure more tax revenue. And I am quite anxious to see what they will announce this week.
Yeah, in terms of the reform, and to your point, right, the relationship between the local governments and how they see growth and the central government and how they see the local governments and their role, of course, there as well. Fantastic. Thank you so much for all of this. Dan Wang there, of course, chief economist at Hang Seng Bank, and also joining us here on set is Li Cheng, director at the University of Hong Kong Center on Contemporary China and also the world. And for our Bloomberg clients, you can turn to your terminals on this. TLIV Go, of course, on the data that just was released, of course, commentary analysis from our Bloomberg expert editors here. We have some updates here on Donald Trump.
Yes, we're hearing from the FBI now, a little bit more on this investigation into the shooter that opened fire at that Pennsylvania campaign event for Donald Trump. Appears to have acted alone, according to the Federal Bureau of Investigation, and there is no current public safety threat. So this came out from FBI officials in the last couple of minutes or so. They have been talking about a full force of the agency to the investigation, and a little bit more on the man identified, of course, the 20-year-old Thomas Matthew Crooks as well. Appears to have used an AR-556 style rifle they believe was legally purchased by his father, but still unclear right now of a motive behind the shooter's actions. We'll have more coming up. This is Bloomberg.
There's no place in America for this kind of violence, for any violence, ever. Period. No exceptions. We can't allow this violence to be normalized.
And that was President Biden there speaking, a rare appearance, in fact, out of the Oval Office a couple of hours back, condemning the shooting at this weekend's Trump rally in Pennsylvania. More updates coming through here out of the FBI that the probe to date indicates that a shooter at the Trump rally did act alone, as Yvonne was earlier pointing out. Let's bring in Jill Deeses here, our news desk editor, to talk us through, of course, where we are in the story as far as you're concerned. And yeah, we're all yours.
Yes, so David, I think, look, what you heard out of Biden right now in this very rare Oval Office address was essentially that we can't allow violence to become normalized in the United States. He's calling for a cooling off of, this really, really heightened political climate. Really, I think very interesting remarks there that place Biden and Trump both at very interesting points in this campaign. I mean, obviously, we've just spent the last 2 weeks talking specifically about President Biden, whether he's actually fit for office, whether he's too old for office. You've now seen a very dramatic shift, obviously, in some of the tone of this race following that assassination attempt over the weekend. As you said, some new details coming in right now. FBI, it sounds like, is still searching for a motive from the shooter, but I think really just kind of encapsulates how dramatic and how concerning a lot of these recent developments have really been for this campaign. I think still a lot to kind of unpack about what that actually means for the trajectory of the election going into November. But at this point, at least from Biden's front, I mean, again, just a week ago, we were talking about whether or not he would actually still be at the top of the ticket. Now we're in a very different place with this race.
How does it change the dynamics? I mean, yes, it might galvanize the GOP base. You get a bit more sympathy votes from Trump as well. But, we talk about, we're still talking of months until we get to the actually November election. And the polls haven't changed too much compared to other events that we've seen, like the presidential debate, for example. Yes,
Yvonne, I think that at this point we have to be really, really careful with how exactly we interpret what this really dramatic news over the weekend may mean for the campaign. Obviously, we've all seen those images of former President Trump, very bloodied, kind of raising his fist to the crowd. I think there's, maybe something to say about, yes, as you said, how much that galvanizes existing Republican voters. But what does this actually mean for any sort of swing state independence? We're really not sure yet. I think we have to see what the polling actually looks like a bit out, because as you said, we saw maybe a little bit of movement away from Biden in the aftermath of that really disastrous debate performance, but not a massive swing. Going back a little bit earlier, we certainly saw, in the aftermath of Trump's conviction on those charges earlier this summer, not a huge amount of swing there. So there's really not a ton, I think, that we can interpret yet. We'll have to see what the polls say.
Jill Deeses, our news desk editor. We'll leave you with a look at this. And for our Bloomberg clients, of course, WSL space election or takes you to our election monitor, some of the data, of course, that concerns all where you are in the betting markets and everything in between. You can find it on this specific home base. There we go. Plenty more ahead. This is Bloomberg.
We're continuing to watch the market reaction, of course, from this weekend's events and this assassination attempt of President Trump over the weekend, or former President Trump. Defense stocks, you're seeing that in Korea actually react to some of these, events as well. The Trump trade certainly gaining momentum here in the Asia session, so you're seeing that in defense. Also, when it comes to the EV sector as well, certainly, Trump has been seen as more the unfriendly candidate when it comes to new energy or the EV sector as well. So Tesla suppliers are certainly something that we're watching out for in this part of the world. And really what part of the Trump trade is, you're not seeing that traditional flock into traditional havens, but more into the dollar, the steepeners of the curve and the like here. So the dollar getting more pronounced and stronger against basically all major currencies here this morning. We got plenty more ahead. This is Bloomberg.
This event has sort of restated or reshaped the baseline of the campaign. Trump looks a lot stronger. It's not that we're going to see a massive bump in the polls for him. This election was always going to be close. It will remain close. But the issue now, or the thing now, is that Trump's base of support is solidified. It'll be much harder for him to lose ground, and by exchange, it'll be much harder for President Biden to make up ground.
It is going to cause the Republican National Convention to have a more conciliatory tone, to have a more patriotic and hopeful tone this week in order to bring that temperature down.
Beijing has been tilting its assessment in favor of Trump winning the presidency. I think they're likely listening to the discourse coming out of the United States over the past 24, 48 hours, and I think we all seem to think this further moves the needle in Trump's favor.
Some of our guests there earlier on the implications of the assassination attempt on Donald Trump. Welcome back. You're watching the China Show.
Yeah, we're looking at some of these Trump trades right now. So it's a stronger dollar, number one. Equities don't seem to be that much phased. In fact, U.S. futures are pushing higher, and as you can see, VIX futures have now just come off their highs of the day. We mentioned the strong dollar. It's also the stronger cryptocurrency space. We're up 3.3% on Bitcoin. We took out 60,000, 61, and now, as you can see, we've taken out 62,000. The rest of the region, though, Asia, and we're going into the Japanese lunch break right now, on an equity market basis, a 0.25% to the downside. And most, not all, markets are down, but there's also, of course, the fact that you don't have, of course, Japan up and running today, so you don't have cash treasuries, you do have treasury futures. You do have, of course, some of your Nikkei futures trading as well. And also we're coming off the data dump coming out of China, where most, not all, missed forecasts, particularly the retail sales one was on the very low end of, if not missed the low end of forecast completely at 2%.
Yeah, we'll continue to watch that. Of course, it's a big week, not just with what we're dealing with this weekend's events, but also Powell set to speak. We have the plenum kicking off today as well in China. Let's bring in Mark Cranfield, our MLI strategist, joining us from Singapore here right now. We talk about these Trump trades. Mark, how closely and how long-lasting do you think these moves are really going to be?
They won't. We'll all be talking about Powell trades in a couple of days. You have to put this into some context as well, because what people are describing as Trump trades are very hard to compare to 2016 when he was elected the first time around, because most of those, the genuine Trump trades, the boost to the stock market, the steepening trade, the idea that it was going to be inflationary, the initial boost for the US dollar, those things happened once it was confirmed that the Republicans had all three wings of Parliament in the United States. It's a very long time before we know whether they're going to do that. Indeed, that's not even the base case for most people at the moment. So yes, Trump is still the leader in the betting odds for the US presidential election. That hasn't changed over the weekend. But to say that there are massive Trump trades to be put on now, most traders won't do that. They're going to defer some time. They've got plenty of time to think about that. The steepening trade in itself does have legs to run, but that's more because of the Federal Reserve. And Jerome Powell kicks off the week. He's likely to sound pretty dovish. He's got a great inflation report behind him. In fact, one Fed member described it as an excellent inflation report. Bloomberg Economics thinks that the core PCE, the next reading this month before the Fed meets, will come down to about 2.5%. That's very encouraging as well. So Jerome Powell has everything he needs to push people into thinking that a rate cut is getting closer. And people are betting now. It's almost consensus now that we're going to get that first cut in September. Traders are piling in that way. Some people think he might even go for 50 basis points in September to really kickstart the move in lower interest rates. So everything is pointing towards short-term Treasury yields getting more of a boost from the Fed than long-term. That's a steepening trade in itself. You can describe it as a Trump trade if you want to, but really it's a Powell trade, and that's what we'll be really focused on as the week progresses.
Just in China, Mark, your thoughts on the data and what it means for markets, because we also have the third plenum, of course, kicking off today.
Well, it just shows you that the investors really need to see something good coming out of the third plenum. They need to see action or things which are actionable very quickly. There'll be lots of grand talk and big ideas, big picture themes and things, but investors need to see something fairly quickly, or they're going to lose heart in the Chinese equity market pretty quickly, because that data was not good across the board. People will even look at the property sector and say there was an improvement, but it's still going down. It's still declining. So it's all going in the wrong direction. There was nothing encouraging in that data at all. It really needs to come out with some big measures from the plenum, and they need to be things that can be enacted pretty fast.
Mark, thank you. Mark Cranfield there, our MLIS strategist. As we talk about China, Bloomberg Intelligence has a new report, and really what they're expecting out of this third plenum here this week. We really could chart a long-term and decisive course for some of its most important sectors, including the likes of tech and property. China equity strategist Marvin Chen is with us here right now. So what do you expect out of this plenum, and what impact could it have on stocks?
Yeah, so this plenum will give investors insight on some of how policymakers are thinking about the medium to long-term outlook for the economy. But what's key to remember is this is a very high-level meeting, and the most likely outcome is still kind of a continuation of recent policy measures. So, we'll likely hear things on tax, property, fiscal reform. We'll likely see an emphasis on self-reliance and also innovation and, the new productive forces. And some of these sectors may see some pickup in sentiment due to this. But for the overall market, stocks have generally seen limited impact from previous plenums, given just in the absence of groundbreaking reforms.
Yeah, and more immediate actionable items, right? So let's look short term then. The second half of this year, we're about a couple of weeks in, range bound at best. Are you bullish? What does the outlook look like for Marvin Chen?
Yeah, I mean, we kind of, the momentum in China markets have kind of stalled out as investors wait for kind of more policy easing. And, at the same time, it doesn't help that the summer period has historically been seasonally weak for Chinese stock returns. So in terms of the policy easing, we think that it's kind of been put on hold, waiting for the Fed to move first, given some of the concerns on currency and capital outflows. The good news is that it looks more likely now that the Fed is more likely to move in September. So, we could see some easing following that. Fundamentally, going into the second half, we have seen earnings revisions kind of pick up going into the second half of the year. So we think China stocks could gain some momentum once the policy easing continues.
What about the U.S. election risk? How should we deal with that?
Yeah, over the events over the past couple of weeks have increased uncertainty with the U.S. elections, and obviously that can drive some volatility going forward. But in terms for China, we think that trade frictions, U.S.-China tensions are going to continue either way, no matter who wins the elections. But what the difference is whether we get the broad sweeping tariffs of the Trump administration or kind of the more targeted focused tariffs from the Biden administration. And the increasing likelihood that we see kind of broad sweeping tariffs may force Chinese policymakers to act more quickly in terms of the domestic recovery.
We're moving into earnings season soon. You mentioned earnings, right? So a couple of our guests have pointed out that the consensus projection of 14% seems too optimistic. So I think, is it Bank of America?
Goldman, too.
Yeah, Goldman, Bank of America, I think we're either high single digits or low. What's our current run rate on MSCI China? Which sectors stand out to you as having the most visible earnings runway ahead?
Yeah, so consensus is a bit high in our view, a double-digit growth. We're kind of borderline 9-10% growth built into our model for this year. It's for the next several quarters, earnings is going to be led by tech, the e-commerce platforms, while the broader market is still facing kind of earnings contractions due to the deflationary environment.
Okay, Marvin, thank you so much. Marvin Chen there, our Bloomberg Intelligence China equity strategists. Right, plenty more ahead here on the China Show. All right, we're looking at some weakness across Treasury futures, so yields would be pushing up if they did. And in about, what time is it now, 11? So in about 4 hours from now, of course, when London opens up, that's when you get the yield picture coming through. Higher yields, stronger dollar is the story so far right now. But, as Mark Cranfield out of our MLive team just pointed out, right, we moved from a Trump conversation to a Powell conversation very, very quickly, according to him. Earlier on, we were speaking with Rich Claret. In case you don't know him, of course, he's with PIMCO, Global Economic Advisor. I heard he used to be at the Fed, too. He's not expecting, only the vice chair, not expecting any drastic changes to policy, regardless of who does win the November elections. He also told us that PIMCO thinks the easing cycle will begin.
We expect the Fed to start cutting in September. I think the data has moved in a direction, both in the labor market and in the inflation data. Well, I think we're actually hearing from Chair Powell today. We've heard a lot from Chair Powell, Centra, and up on the Hill, so we'll get more insight and, of course, a Fed meeting. But we do expect Fed rate cuts this fall, obviously during the Biden presidency. And then the course for policy under either a Biden or Trump presidency, I think, is going to depend on the data and the evolution of the economy.
You were vice chair during the Trump administration, and we saw, of course, a lot of pressure coming from the administration itself on the Federal Reserve. Yeah. How much influence does the president have on the Fed?
Well, the influence any president has on the Fed is through his ability to nominate individuals to be governors, vice chair, and chair. But a president can only nominate someone to the Fed if there's a vacancy, and there will be no vacancies on the Fed. At least none are scheduled to occur until May of 2026, when Jerome Powell's term is up. So over time, a president can nominate individuals, but they are subject to Senate confirmation. I can tell you, having gone through it, it's not a rubber stamp. The Senate takes the advice and consent very seriously. And so over time, the president can put appointees in if they get confirmed. But nothing happens on day one. The Fed on the first day of the next presidency is going to be the same Fed that we have right now.
Moving forward, because it's not just the rate cut that we could see this year, there's a few more that are priced in as well for next year. Do you see, though, the Fed being a little bit constrained if Donald Trump is re-elected and we do see higher tariffs and looser fiscal policy?
Well, again, there are certainly scenarios that would be inflationary, and the Fed's job is to maintain price stability. I would point out, during my time at the Fed, 2018 to 2022, there were tariffs put in place, and there were immigration restrictions, and inflation was actually relatively low, in fact, a little bit below 2%. So the details are going to be actually quite important, and I think it would be too soon to predict. But certainly there are scenarios where that could be an issue for the Fed, but I think it's just too soon to tell.
How well is the Fed doing right now when it comes to reining in inflationary pressures?
Well, I think you have to give the Fed pretty high marks so far. They raised rates aggressively. They by their own account, they got a late start in March of 2022, 6 to 7 months maybe. But under Jay Powell's leadership, they pushed rates into restrictive territory. Inflation, which was 7% when they began to hike rates, is now running at about 2.5%. The most remarkable thing is that the labor market has adjusted, much as Governor Waller indicated, not not through rising unemployment, but through firms cutting back on posting vacancies. And so, we're not there yet. No one wants to declare a mission accomplished, but certainly relative to where we were 2+ years ago, it's looking like a pretty successful disinflation.
That was the PIMCO Global Economic Advisor and former Fed Vice Chair Richard Clarida speaking with Bloomberg's The Asia Trade. And coming up on Bloomberg TV, Fed Chair Jay Powell speaks to the Carlyle co-founder and peer-to-peer host David Rubenstein at the Economic Club of Washington. You don't want to miss that interview. That could be the one that could be market moving, as Mark Cranfield mentioned just earlier. And you can catch that interview on the Times on your screen.
Right. Just ahead, the assassination attempt of Donald Trump is drawing, mixed reactions in China, with state media criticizing U.S. democracy. More from a China brief is just ahead. This is Bloomberg. Right, welcome back. You're watching the China Show. The reason we're looking at a company called Wysock is because the Chinese name of the company actually sounds like if you said Trump wins big in Mandarin, that would about be the same sound as.
How do you say it? Do you remember?
You probably see it. I don't know. I don't have it on my screens right now. Although it's worth pointing out, too, so Donald Trump actually has several names in Mandarin. Right?
Yes.
So it depends on where or you can say his name in Mandarin. There's several versions of Donald Trump.
Yes, let's not go through all of them
Which is interesting,
Yeah. But let's look at some of the reactions, though, that we're getting out of China to the Trump assassination attempt in today's China brief. Now, the state-run tabloid Global Times has published an editorial hitting out at the U.S. political system, and it says that, quote, U.S. democracy is currently experiencing a significant pathological symptom characterized by extreme polarization and a decline in trust in the democratic process. The future of U.S. democracy hinges on addressing these internal challenges rather than focusing solely on external strategic competitors. And of course, social media users in China are also reacting to this incident with a mix of sarcasm and admiration for the former president. Let's get to our China correspondent, Min Min Lo. She joins us now. So what are the netizens saying online, Min Min?
Yeah, we're seeing quite a range of different responses. Some of them are comparing what had happened in the U.S. with what had not happened in China, because, of course, in China, such events would have been very tightly choreographed. There would have been security scanners, plenty of police presence. So this one says, this free and democratic country is really free. Let's show the first quote. Yeah, really a bit of sarcasm coming through there. There were other comments that says China is the best. So making a veiled swipe at the U.S. political system. Let's flip to the next quote. It says, after the shooting, a bloodied Trump raised his fist and shouted, not only showing a commendable spirit, but also a determination to save the people. Oh, I think this is the wrong one. Previous quote, sorry about that. Yeah, so that really, we saw quite a number of these comments that were quite sympathetic towards former President Trump. Chinese people saying that they are so inspired and touched by that photo, and they can't imagine as Chinese people, they are already feeling that way. How would an American feel? This is another quote that says, I hope Trump wins. After all, both are bad for China, but Trump is more fun than Biden. We know that U.S. intelligence have found that China doesn't seem to have a preference over either candidates, and that was a quote that is really just poking fun at this, saying that Trump has more entertainment value. And this one, Trump got the photo of his lifetime at 70 years old. Now, that iconic image is really making its rounds on social media. Chinese people are just breaking that photo down, just analyzing how perfectly framed it is. This guy says he's looking at the photo for the whole day and is still in awe of that photo. And that you see this photo over here, really just dissecting that photo, just how perfectly framed everybody is. I believe that photo is also on Twitter. It's hard to say whether it's spread from Western social media to the Chinese one or the opposite direction.
Yeah, the composition was near perfect. I think I saw a different version of that on English social media. Well, speaking of that image, that's actually made it to some apparel that's being sold onshore, Min.
Yes, that's right. So there has been media reports that Taobao and Chinese retailers have been really quick in getting T-shirts printed with some of these really iconic photos and getting them sold on Taobao. But the thing is, I did go on Taobao to search for these merchandise earlier today and yesterday afternoon as well, but I couldn't find anything. So I'm not sure if it's already been censored by Chinese regulators or it's just available in certain regions. But certainly there are media reports that these Chinese retailers are putting these up within 3 hours of that shooting. That shooting happened at 6:30 p.m. local time. Biden's first comment came in at about 8 p.m. and these T-shirts are out on Taobao by 8:40 p.m. So faster than some global governments as they are still scrambling to formulate a response to that event. And it really shows how nimble and fast-moving some of these Chinese retailers and factories are in capturing market opportunity.
Yeah. Well, some of the, I mean, there's overcapacity in some issues, so some of them are sitting idle. I mean, there is some assets to be put to work. I'm kidding, of course, but yeah.
I still remember during the Trump-Kim summit and how those T-shirts that came out all around as well. So certainly, yes, I'm not surprised that we're seeing potential retailers really taking advantage there. Min Lo, thank you so much for bringing us that, our China correspondent, on, of course, a social media reaction to this weekend's events. And here's some other stories that we're following for you today as well. The Financial Times says Goldman Sachs is appealing its result in the Federal Reserve's latest stress test, which would require the bank to hold more capital. According to their sources, the move comes after CEO David Solomon said the result did not reflect Goldman's efforts to make its business more stable. And a source says Alphabet is in talks to acquire cybersecurity startup Wiz, and we're told the transaction could total as much as $23 billion, making it Alphabet's largest acquisition to date. Last week, Google's owner reportedly shelved efforts to acquire customer relationship management firm HubSpot.
Okay, just to recap some of the data that came through this hour on China. So a couple of things. The industrial production numbers actually was one of the few bright spots here, 5.3%, higher than estimates of 5%, and coming in near the top end of forecast, although not at the very top end. Although most of these other metrics actually came in much, if not softer than the average, much softer than expected, really.
Yeah, the retail sales print, I think it was the weakest we've seen in 2 years.
December 2022.
Yeah, a 2%. Just goes to show, I mean, we were talking about those consumption programs, the trade-in programs, maybe hasn't done enough to really turn around the consumption story as of yet here as well. But yes, that brings us, is there going to be quite a high bar then for the plenum this week for them to deliver anything, really? Yeah, and really a high bar too on, for investors to take the reality of the economy and pivot back to the Chinese markets, right? So I think we're seeing, when you look at market reaction so far, it was a cautious start to the trade anyway, and then the data happened, and as you can see, we did bounce off into where we are right now. So we're just coming off lows of the session. We're down 0.9%. But it does certainly, in some ways, centers expectations on should we hear more, should we expect more from policymakers, given that the data so far hasn't responded. But some of our guests have pointed out, this is not the avenue to talk about very cyclical short-term measures. And also, if you think about it, growth at 5% is where they wanted it to be anyway. And we did come in at 5% in the year-to-date number. Yeah, so at least they're still on course for that. But, Bloomberg Economics, they just came out with their reaction to this, right? They're saying that the weak consumption number did really slow the second quarter. And it really does show that need for more stimulus, and really showing the economy is struggling to maintain that tepid recovery, and even undershot their most conservative projections as well here. So we're watching, of course, the property sector. Some of these property stocks are reacting pretty negatively to some of the data that we got as well. That is it for us here on the China Show. Bloomberg Markets Asia is next.